The fourth quarter in the Muscat corporate world is defined by hard deadlines, but your most expensive deadline might be sitting in your wallet. At midnight on December 31st, your annual dental insurance benefits expire. Professionals holding mid to high-tier corporate health policies from providers like NLGIC, OQIC, or Cigna have a specific financial asset tied to their oral health. Many assume a premium health plan acts as an open tab for cosmetic upgrades, covering things like custom veneers or invisible alignment. The actual policy limits are far more restrictive. This chart shows how a standard 800 Omani Rial annual dental cap functions. Throughout November and December, the funds are available, but the moment the calendar flips to January 1st, the balance drops to zero because unused benefits do not roll over. Failing to deploy these funds before the year ends means you are voluntarily forfeiting a significant portion of your negotiated compensation package. To use this money effectively, you have to identify who actually controls it. Your insurance company does not approve your dental claims directly. They outsource that job to a third-party administrator, or TPA. TPAs like MedNet, NextCare, and NAS employ medical reviewers who follow strict algorithms. Their sole mandate is oral health preservation, meaning they are instructed to ignore requests for aesthetic enhancement. Most policies in Oman contain a cosmetic exclusion clause. Any procedure requested solely to improve the color, shape, or alignment of teeth will be rejected. If a clinic submits a claim for an expensive zirconia crown without an X-ray showing active decay or trauma, the TPA will issue an instant denial based on that exclusion. TPAs prioritize clinical evidence of functional necessity over a clinic's reputation or location. To secure coverage, your dentist must provide radiographic proof that your treatment is medically required. Consider a common scenario. You need a cavity filled on a back molar, and you request a tooth-colored composite filling, so it looks natural when you laugh. This chart maps how the TPA processes aesthetic requests. A cheaper metallic filling restores function, so the algorithm routes the claim to a downgrade clause. The insurance pays the silver amalgam value, leaving you to pay the cosmetic surcharge out of pocket. To avoid this penalty, use a medical necessity pivot. Shift the narrative away from visual complaints toward structural failure. When the input changes to documented structural failure, the algorithm routes toward approval for the higher quality material. You validate this path by proving the tooth is heavily worn from teeth grinding, fractured from an accident, or threatened by a leaking filling exposing the nerve to infection. Your dentist must record specific diagnostic codes in their written submission. They must present evidence that the tooth will fail without immediate intervention. Aligning the visual result you want with the functional repair the insurance requires is the only way to obtain a subsidized cosmetic upgrade. This strategy is particularly useful if you need 1,500 OMR worth of necessary crowns, but your expiring annual cap is only 800 OMR. Track treatment costs against 2 consecutive benefit cycles. In Phase 1, schedule upper jaw work in late November, maximizing your expiring Q4 limit. In Phase 2, schedule the lower jaw in early January to instantly access your newly refreshed annual limit. This is a standard ethical billing sequence. Phasing the treatment across the new year allows you to double the insurance company's total contribution to your care. This approach requires patience. You will need to live with temporary restorations during the transition and coordinate the exact billing dates with the clinic's insurance coordinator. For massive oral reconstructions started in Q4, the year split strategy effectively doubles the insurance contribution by utilizing 2 consecutive benefit caps. Your next steps depend on your clinical needs. If your teeth are healthy and you simply want laser whitening or cosmetic veneers, the insurance TPA will likely deny the claim, regardless of the paperwork. For purely aesthetic goals, you should plan to pay out of pocket and look for the heavy seasonal discounts clinics offer around National Day or Ramadan. However, if you are dealing with failing restorations, missing teeth, or trauma, you should prioritize your insurance benefits. Note the missing tooth clause. Insurers rarely cover an implant if the tooth was lost before your current policy began. They generally only pay for replacements for teeth lost during the active coverage period. If you need complex restorative work, look for high-volume clinics in hubs like Quorum or Al Quair. These practices often employ dedicated coordinators who are experienced in navigating TPA reviews and diagnostic codes. Choosing a clinic with strong administrative experience is just as important as verifying the dentist's clinical skill. To get started, log into your insurance portal today, verify your remaining annual limit and your specific copay percentage. Confirm that your chosen clinic has a direct billing agreement for your specific network tier. This prevents you from having to pay the full cost up front and filing for a manual reimbursement later. Ensure your clinic submits a complete evidence package. The TPA requires panoramic x-rays, intraoral photos of the damage, and a detailed doctor's narrative. If a claim is denied, ask your dentist to schedule a peer-to-peer review. This allows your doctor to discuss the clinical facts directly with the insurance medical director to appeal the decision. Book your consultation now. Gathering evidence and obtaining TPA approvals takes several weeks, and your annual benefits will expire on December 31st. Use the coverage you have earned before the limit resets.